6:22 a.m., June 14th, 2026. Chesapeake, Virginia, 4 U.S. Marshals walked into the lobby of the Tidewater Maritime Consulting Group carrying a sealed warrant in a manila folder. The receptionist looked up. She didn't get a word out. In the conference room behind her, a 61-year-old man was pouring coffee for 2 clients. The carafe was still in his hand when the door opened. Estimated value of the stolen components, $4. $2 million at 2007 prices. Estimated timeline of the theft, 19 years. Number of federal agencies now involved, 4. He set the carafe down. He didn't run. He didn't argue. He said nothing that was recorded. What brought you? S. Marshals to a waterfront consulting firm on a Sunday morning in June wasn't a tip, a wiretap, or a confidential informant who flipped under pressure. It started with a weight discrepancy, 340 pounds, on a shipping manifest for industrial calibration equipment at the port of Norfolk. That number, 340, is what this case comes down to. The difference between a routine customs inspection and a 19-year federal cold case reopened in real time. The file had been closed since 2007. The warrant had not. A CBP inspector named Raylan Deeks had been working the port of Norfolk for 11 years when the container arrived on March 7th, 2026. The manifest listed the contents as industrial calibration equipment, pressure gauges, flow meters, alignment tools. The declared weight matched the container volume. On paper, everything cleared. Deeks pulled it anyway. He later told investigators he couldn't explain why. The paperwork was clean. The routing was clean. The shipper had an established commercial record. But the declared weight and the actual weight, measured by the port's certified scale, were off by 340 pounds. Not 3,000. Not 300,000. 340. In industrial freight, that's noise. Measurement drift. Pallet variance. 9 out of 10 inspectors log it, flag it as within acceptable tolerance, and move the container to the release queue. Deeks opened the crate. Inside, 6 sealed secondary containers, each marked with a standard commercial shipping label. No distinguishing markings. No military insignia. Nothing that would trip a secondary screening algorithm. But Deeks had spent 4 years before CBP as a Navy logistics specialist at Naval Station Norfolk. He recognized the fastening hardware on the secondary containers before he read a single label. The bolts were torqued to a military spec pattern. Counterclockwise, 3/4 turn, then back 1/8. A specific pattern used on sealed storage housings for classified acoustic equipment. He photographed the serial plates on all 6 containers. He called his supervisor. His supervisor called the Port Authority Liaison. The Port Authority Liaison called Naval Criminal Investigative Service. By 10:30 a.m. on March 7th, 2 NCIS special agents were standing in the port inspection bay looking at 6 crates that, according to a 2007 Naval Station Norfolk inventory audit, had been destroyed in a training accident 19 years ago. The NCIS field office in Norfolk maintains a searchable archive of component serial numbers cross-referenced against Navy inventory audit records going back to 1989. The system is called SEATRACK. It was updated in 2019 with an RFID overlay that allows retrospective matching against tag-read records from base logistics operations. The 6 crates matched SEATRACK entries from Naval Station Norfolk's 2007 annual audit. All 6 components were listed under the same disposition code, DD47, destroyed, training accident. Disposition certified by the logistics officer on duty. Date, November 14th, 2007. The logistics officer on duty that day had been Chief Petty Officer Warren Aldred Franco. The NCIS agents ran the name through the standard separation database. Franco had retired from the Navy in April 2009 after 22 years of service. Honourable discharge. Full pension. Commendation letters from 2 commanding officers. No disciplinary record of any kind. Current address, Virginia Beach, Virginia. Current occupation, self-employed, maritime equipment consulting. The agents didn't make contact that day. They opened a file. The case was designated Category 2, classified material, and assigned to NCIS Special Agent Diana Resch, a 12-year veteran of the NCIS Economic Crimes Unit who had worked 3 previous military theft cases involving classified components. I spent hours going through the archived case documentation on the 2007 investigation, and one detail kept coming up. The original inquiry wasn't abandoned because agents ran out of leads. It was abandoned because the chain of custody on the recovered evidence had a gap, a single misfiled evidence log. 1 box, logged to the wrong case number, sat in a Norfolk federal storage facility for 18 years. The investigation was labelled inconclusive and shelved. The right man had been in the room in 2007. The file was closed anyway. Resch pulled the 2007 case file on March 9th, 2026. What she found was a 47-page investigation summary that had been compressed to a 2-page close-out memo. The summary described an inventory discrepancy flagged during the November 2007 audit at Naval Station Norfolk. 6 sonar components, acoustic signal processing units, were listed as missing from a secure storage bay. Franco, as logistics officer, had filed a DD-47 disposition report certifying they had been destroyed during a training exercise 3 days earlier. The 2007 investigation had focused on 3 questions. Was the training exercise real? Were the components actually destroyed? If not, where were they? The training exercise was real. 42 personnel had participated. The components, however, had not been on the training manifest. The discrepancy was noted in an interview with the exercise coordinator, who stated the components were never brought to the training site. Franco had been interviewed twice. Both times, he maintained that the disposition report was accurate. The components had been transported to the training site in a separate logistics run and destroyed per protocol. The logistics run manifest was missing. Franco said it had been filed with the base administrative officer. The administrative officer had no record of receiving it. The investigation stalled. A search of Franco's quarters and vehicle produced nothing. A review of his financial records, within the legal scope of the 2007 inquiry, showed no unusual transactions. The misfiled evidence log made things worse. A physical evidence tag from a component housing fragment recovered near the training site had been logged under a different case number. When investigators tried to retrieve it, the tag couldn't be located in the system. The inquiry was officially closed in February 2008. Franco retired 14 months later with a spotless record. What's most surprising about this case isn't that the components were stolen. Military equipment theft is rare but documented. What's surprising is the recovery mechanism. Not a whistleblower, not a wiretap, not a controlled delivery. A custom scale. 340 pounds. An inspector who'd spent 4 years handling military hardware and still remembered what the bolt pattern looked like. Resch submitted a formal request to the NCIS Archives Unit on March 11th to retrieve all physical evidence from the 2007 case. The misfiled evidence box was located on March 19th in the Federal Storage Facility in Portsmouth, Virginia. It had been sitting under an incorrect case number for 18 years. Inside, the component housing fragment from the training site, with an intact RFID tag. SEATRACK's 2019 RFID overlay had never been run against this tag because the physical evidence log hadn't matched the case file. When Resch's team ran the tag on March 20th, it returned a match in 2 seconds. The fragment was from one of the same 6 components now sitting in the CBP inspection bay at Port of Norfolk. Franco hadn't destroyed them. He'd removed the components from the secure bay, transported them to the training site, staged a partial destruction, enough to account for 1 fragment. And kept the rest. That working theory needed a second confirmation. Resch requested authorization to initiate a financial investigation through Homeland Security Investigations. HSI was assigned to the case on March 25th. HSI analysts pulled 14 years of financial records for Warren Aldred Franco. What they found was structured. Not obviously. Not in a way that trips automatic fraud detection, but methodical. Between 2009 and 2023, Franco had received 31 wire transfers from 4 different corporate entities. The transfers ranged from $18,000 to $147,000. None of the individual transfers tripped the reporting threshold. The total across 14 years was approximately $2, $1 million. 3 of the 4 corporate entities had been dissolved. The 4th, a maritime equipment trading company registered in the Marshall Islands, was still active. HSI analysts cross-referenced the Marshall Islands entity against OFAC's sanctions database. The company had been flagged in 2021 in a separate OFAC review related to unauthorized technology transfer to a foreign state actor. The review hadn't produced a prosecution. The entity restructured and continued operating under a modified registration. One of the 3 dissolved entities had a documented transaction history that included a wire transfer to a maritime contractor based in Eastern Europe in 2014. A second had received payment from a company later identified in a 2018 DEA investigation as a front organization for a foreign procurement network. The components had moved. They had moved in pieces, over more than a decade, through at least 3 intermediary buyers. Put yourself in Resch's position. 14 years of clean transfers. An offshore entity that restructured after an OFAC flag. 3 dissolved shells. 6 components that touched an OFAC-sanctioned procurement network. And 1 retired petty officer in Chesapeake, Virginia, pouring coffee for clients on Sunday mornings. The scope of what she was looking at had grown considerably since March 7th. NCIS and HSI submitted a joint request for U.S. Marshals service involvement on April 8th. The Marshals were assigned for warrant service based on a fugitive risk assessment, not because Franco had fled, but because the complexity of the financial trail indicated advanced planning capability. If the target had maintained an offshore financial structure for 14 years, the assessment was that he had the means and possibly the contacts to disappear. Here's the take that may not be popular. The 2007 investigators did their job. They identified the discrepancy. They interviewed the right person. They requested financial records. The failure wasn't incompetence. It was infrastructure, a misfiled evidence box, a case number transposition. 18 years of a man collecting a pension and consulting fees because one physical evidence tag ended up in the wrong folder. The system didn't fail because someone was careless. It failed because evidence management in 2007 was a paper process in a building that flooded twice a year. The arrest warrant for Warren Aldred Franco was filed on June 9, 2026, in the Eastern District of Virginia. Charges: theft of government property, unauthorized transfer of classified material, conspiracy to violate the Arms Export Control Act, and money laundering. The last charge required documentation of the financial structure's intent. HSI analysts had spent 8 weeks building the transaction map. 31 transfers, 4 entities, 2 foreign buyers with confirmed sanctions exposure. The laundering structure wasn't sophisticated by financial crime standards. It was consistent, same timing intervals, same amount ranges. Enough to stay under automated reporting thresholds for 14 years. What Franco had built wasn't a network. It was a routine. Retire, consult, receive payment from entities no one would ask about because they were registered offshore, let the transfers age, stay clean on paper. It almost worked for 19 years. The obstacle Resch's team hit in late April wasn't legal. It was logistical. The Marshall Islands entity had restructured its registration in 2021, and the post-restructure documents listed 3 nominee directors. None of them could be connected to Franco directly through U.S. financial records. To establish the conspiracy charge, prosecutors needed to demonstrate Franco's continued operational role in the entity after restructuring. NCIS obtained authorization for a targeted digital surveillance operation on April 22nd. Over the following 6 weeks, analysts monitored Franco's business communications through legally authorized interception of his corporate email and registered business phone. The Tidewater Maritime Consulting Group had a website, a listed phone number, and a business email address, all reachable through standard commercial interception authorization. Between April 22nd and June 1st, Franco sent 14 emails to an address associated with the Marshall Islands entity. 11 were routine, consulting scheduling, invoice discussions. 3 were not. The 3 non-routine emails referenced equipment sourcing inquiries from a client Franco described as a regional infrastructure partner. The equipment referenced matched the technical specifications of the components currently in federal custody at the CBP facility in Norfolk. Franco was trying to broker a replacement order. The strangest detail in the case file, and the one that stuck with me. He sent the 3rd of those 3 emails on June 3rd, 2026, 11 days before the warrant was served. He was actively working the procurement angle while NCIS and HSI were finalizing the arrest package. There's a line in the indictment that reads almost like fiction. Defendant continued to solicit procurement inquiries for equipment substantially similar to the stolen components while under active federal surveillance as late as 11 days prior to arrest. Either he didn't know he was being watched, or he knew and calculated that one more transaction was worth the risk. The surveillance also confirmed Franco's continued operational relationship with the Marshall Islands entity. One of the 3 non-routine emails included a reference to a specific account number. An account HSI had already identified as connected to the foreign procurement network flagged in the 2018 DEA investigation. That connection closed the conspiracy charge. What do you think? Did the federal system fail the Navy in 2007? Or was this outcome always likely once the original investigation stalled? The comment section has been more divided on this than on almost any case this channel has covered. Resch's team ran a final coordination call on June 12, 2026. The arrest team, 4U.S. Marshals for primary warrant service at the Tidewater office, 2 NCIS agents positioned outside, and an HSI agent prepared to execute a simultaneous search warrant at Franco's Virginia Beach residence. The timing was set based on surveillance of Franco's routine. He arrived at the Tidewater office most Sundays between 7:30 and 8 a.m. for what his business calendar listed as client breakfast meetings. 2 clients were scheduled for 8 a.m. on June 14th. The decision to serve the warrant with clients present had a specific rationale. Resch and the Marshals' lead agent, Deputy Marshal Carl Pettit, worked through it on the June 12th call. Franco's flight risk assessment was moderate. He had a passport, offshore financial connections, and a demonstrated ability to plan over long time horizons. Serving the warrant at his residence in the early morning risked a locked door scenario or an exit through the back of a property that backed up to a waterway. The office had a single entry point, a lobby with a receptionist who would be present, and a conference room with no exterior windows. The clients present that morning hadn't done anything. The Marshals knew that. The decision was to serve quickly, with minimal disruption to them, and to have NCIS agents available to take brief statements and explain the process. At 6:22 a.m., 43 minutes before the scheduled client arrival, the four Marshals entered the lobby of Tidewater Maritime Consulting Group. Franco had arrived early. He was already in the conference room. When Deputy Marshal Pettit entered, Franco was standing with his back to the door, pouring from a glass carafe. The two clients were seated. Pettit identified himself and stated that he had a federal warrant for Franco's arrest. He read the charges. Franco set the carafe down. He looked at the two clients across the table. He said, according to Pettit's arrest report, "I need a minute." He was told he did not have a minute. He nodded. He placed his hands on the conference table. He was handcuffed without incident. The clients were asked to remain seated. An NCIS agent came in, gave a brief explanation, took contact information, and released them approximately 22 minutes later. The simultaneous search of Franco's Virginia Beach residence began at 6:28 a.m. HSI agents found 2 external hard drives in a home office safe, a portable rotor with a VPN configuration linked to the offshore entity's registered network, and printed financial records spanning 11 years, records Franco had apparently kept as a personal accounting backup. The hard drives contained encrypted archives. Forensic analysis, which continued through late June, recovered transaction records, email correspondence, and what appeared to be a personal ledger of component transfers. Dates, quantities, amounts received, and buyer identifiers rendered as alphanumeric codes. The ledger documented 6 transactions between 2009 and 2020. 3 were to the Marshall Islands entity. 2 were to the companies later identified as dissolved shells. 1. The first entry in the ledger, dated March 2009, 2 months before Franco's retirement was finalized, was to a private buyer identified only by a 3-letter code. That buyer has not been identified. The 3-letter code doesn't match any entity in the OFAC database, the DEA's financial intelligence records, or HSI's known front company registry. The components, all 6, remain in federal custody at the CBP facility. They can't be returned to operational use. The classified acoustic processing technology they contain has been superseded by 2 subsequent generations of Navy sonar systems, but the components themselves contain materials and circuit design elements that remain restricted under current export control classifications. The 3 identified foreign buyers, the Marshall Islands entity and the 2 dissolved shells, received components across roughly a decade. What those buyers did with the components after acquisition is only partially reconstructed. The Marshall Islands entity transferred at least 2 components to a third-party broker in 2016, based on documentation recovered from the hard drives. That broker's identity was partially established by HSI, a maritime equipment dealer operating out of a port in Southeast Asia. That dealer was approached by investigators in late June 2026. The dealer's records, to the extent they've been examined, indicate the components were further sold to a shipyard contractor in a country currently under partial US trade restrictions. Whether those components were integrated into operational equipment, held for resale, or transferred again is not known. The one buyer from the 2009 ledger entry, the first sale, before Franco's retirement was complete, remains unidentified. Looking at this case in full, here's what it tells us about military logistics oversight in the early 2000s. The gap wasn't in the investigation. It was in the accountability structure that allowed a single logistics officer to certify destruction of classified components with a paper form and no secondary verification. Franco didn't exploit a sophisticated vulnerability. He exploited a 1-page form and the assumption that a 22-year career meant something. Warren Aldred Franco appeared for an initial hearing in the Eastern District of Virginia on June 16, 2026. He entered a plea of not guilty on all counts. His attorney, a Norfolk-based federal defense attorney, declined to comment to reporters outside the courthouse. The prosecution indicated in its pretrial brief that it would seek a sentence in the range of 18 to 22 years, based on the classified material transfer charges and the duration of the laundering structure. The pension Franco had collected since 2009, approximately $1. $4 million over 17 years. is under review by the Department of Defense for potential clawback under Uniform Code of Military Justice provisions governing fraudulent separation. The clawback review is not guaranteed to succeed. Legal precedent on pension recovery in cases involving pre-retirement conduct is inconsistent across federal circuits. The Eastern District has not ruled definitively on comparable cases. The $1 million in documented wire transfers has been traced to accounts that have since been closed, restructured, or placed under sanctions freeze. Actual recovery is expected to be partial at best. HSI's Financial Crimes Unit has identified approximately $340,000 in recoverable assets tied directly to Franco's domestic accounts. The remainder, held through the offshore entity in dissolved shells, is unlikely to be fully recovered. The component whose fragment was found at the training site in 2007, the fragment that sat in a misfiled evidence box for 18 years, has been formally entered as evidence. The RFID match that Resch's team ran on March 20th, 2026, completed in 2 seconds what the 2007 investigation couldn't accomplish in months. Raylan Deeks, the CBP inspector who flagged the container, returned to his regular rotation at the port of Norfolk the week after the arrest. He did not give interviews. He was cited in the NCIS case file as the initiating civilian contact. His name appears once in the arrest warrant affidavit, in a subordinate clause, in the passive voice. Will a case like this happen again in the next decade? A cold file reopened by a routine inspection, a weight discrepancy, an inspector who happened to recognize a bolt pattern? Comment yes or no below. The Tidewater Maritime Consulting Group's website went offline on June 15th, 2026. The two clients who were in the conference room that morning have not been publicly identified. The investigation into the unidentified 2009 buyer remains open. The warrant for Warren Aldred Franco took 19 years to serve. It was served while he was pouring coffee. If you want to follow where the 2009 buyer trail leads, and why that single ledger entry may be the most significant unresolved thread in this entire case, subscribe. That's the part of this story that's still moving.